Good morning, good afternoon, good evening, wherever you're joining us today. It is May 13th for PegNet Weekly Update. I'm Kaitie Zhee, joined with David Johnston.
Hey guys.
Hey, everybody. All right, so we got quite a bit to dive into. Just an overview of some of what we're going to be covering in this video today is going to be talking about the recent news with the Telegram blockchain, how that's relevant to what PegNet is building. Also, David, you were speaking 2 days ago at Consensus Distributed
Yep.
and about the Bitcoin halving and mining and how PegNet plays a role in that. Also, definitely want to save the best for last, where we'll take a deep dive into the continually modified PegNet 2.0. David, you've been a content warrior, putting out a ton of great content on the PegNet medium. So we'll dive into that and break down what you guys can expect. All right, so let's start with consensus really quickly. So what was that like? It was at 2 a.m. Eastern time for those in New York and on the East Coast. It was for the Asian market. And I'm going to give a little highlight or update.
Sure. Yeah, I mean, it was a fun discussion. I've spoken at Consensus a few times, and they do a really good job of sort of organizing the content. It's a good panel, mostly focused on, okay, the halvening has happened. What's next? You know, we're going to see a lot of volatility in the markets. How do traders protect themselves in that volatility? So I got a chance to speak a little bit about how PegNet is a really great way of hedging risk. Obviously, into the stable coins in the system, back into crypto, and really makes it easy for people to balance both sides of that equation. So it was a good discussion, fun to talk with the other panelists. The other one was in Hong Kong, and you know, I was coming here from the North American time zone. So it was a truly global experience. But you know, I think we're going to see more of that with the way things are with the pandemic. So.
Yeah, no doubt about that. So that was cool. I'm excited to get some video capture and update from that. Also more pressing is the news that has been heard around the world in the crypto verse, if you will, about the Telegram blockchain and the ICO that they ran. Do you want to give an update to that and how that ties into a lot of what PegNet's doing, where PegNet's position is in the market?
Sure. So effectively, the news came out yesterday from the founder of Telegram that they are discontinuing their TON blockchain efforts. So TON, TON was the name of the blockchain that they built. Grams were going to be the unit of account, the crypto that you could send around on the TON blockchain, TON and gram, if you get that. But you know, so it's a sad day. They pulled in about $2 billion, if memory serves, in their token sale. And they took it from US and international folks. They, as far as I know, registered with the SEC, and they went through sort of this entire process, but the SEC decided that what they were doing was, you know, sort of an unregistered security, at least perhaps the distribution of those tokens into the world would be such. And so they got into a court battle, and they went back and forth, and eventually the court sort of offered an injunction that said, yep, nope, you can't send those grams to the investors. And they're like, just the US investors? And the court's like, no, you can't send them to anyone in the world. And so Telegram was like, okay, then yeah, I guess we can't go forward, because, you know, if we can't send them to the users, there's no way to sort of bootstrap the system. I mean, you could imagine, you know, they go rogue and ignore the court order, but then does Telegram get delisted from Apple App Store and from, you know, Google Play Store? It's probably a bigger risk than they were willing to take. So it looks like they'll just return what remains of the capital. Something like 70% of the capital is still there, and so they'll return that to investors and kind of move on. Now, there's an effort by the developers in the ecosystem to launch FreeTon as an open source alternative. So it looks like the code base and the technology they built will live on, but it's hard to know if it's going to be very compelling minus the 300 million user base of the actual Telegram chat app, which it doesn't look like they'll integrate anytime soon, free ton with Telegram. So, it's going to be interesting to see how it evolves, but it's definitely a good example of the fact that, to be a blockchain, you have to be decentralized, right? And otherwise, there are too many complications with complying with regulations all over the world in every jurisdiction. It's just tough to do for a protocol, right? And that was the genius of Ethereum and Bitcoin, and the whole thing with PegNet is there's no central entity, right? And the protocol is open source and neutral from the beginning, and people can build stuff on top of it, and they can do compliance locally, but you're not doing it at the protocol layer. So that's a really important lesson. I think a lesson that we're going to see more of, unfortunately, for the stablecoin ecosystem, as all the regulations that have been proposed already by the Financial Stability Board get enacted. Everybody's going to have to deal with those regulations. And if they're a central operator of their stablecoin, they either need to be regulated or become fully decentralized. So, but PegNet has the advantage that we started fully decentralized.
Yeah, so I guess this would be one of those first martyr style examples of, these new draft regulations coming into play into the real world now, where there's a little bit of adhesion to it. So,
yeah,
I think that that's important to note. And I was in the Discord with in the Discord with the PegNet users chatting, and there's been a lot of activity going on, especially as the PegNet 2.0 is rolling out. So everybody's throwing in different voices and opinions there. And one of the positions that I just wanted to call out was that, when folks were getting involved with PegNet in its very, very earliest days, they bought into the fact that it is decentralized. It is fair start proof of work mining since the Genesis block. And that's what they were figuratively and literally buying into when they would participate into the network, right? And, so when you are building something like that, it is fully, completely different. It is all collaboration. It is all hands on deck. It is, plugging in where you can with other ecosystems and communities and growing, versus that centralized, we raised a bunch of money, we can hire the best of talent, and we can, go to the moon. This takes a different kind of collaboration, and PegNet is still so super young. And so I just felt it was important that people, be reminded here that this is fully decentralized. We're not building something that is centralized. And so to have any kind of expectations of what you may see with the 99.9% of crypto projects that are centralized in some form or facet is a little wild to me.
Yeah, no, I think that's a good point and a good reminder. I liked your post on Discord. And, PegNet is organic. It started from literally zero and has been growing from there, right? Which I think is a lot healthier than a project which, raises a ton of money, already has sort of these elevated expectations, but then it always takes a lot of time to deliver. I mean, Telegram was funded 2-3 years ago at this point, and they had built out the code, but it was the original structure that they picked that ended up undermining their ability to launch. Had this been a skunks work project inside of Telegram and they built a bunch of open source, right, and sort of organically just released features and parts of it in the platform, it might be a very different story today. But the style and approach at the time was to raise a lot of capital, right? And things are easier if you raise a lot of capital. You've got tons of money to pay developers and do all these things, but it comes with a lot of baggage, right? And so I personally rather start from zero and build up from there. then sort of do the big head start, because it comes with, risks on the other side. Now, a few projects managed to do that and got grandfathered in, the EOSs of the world, and raised a bunch of money and delivered and got out there before the regulatory, agencies were sort of, being as strict about compliance. And so, but I don't think that model exists anymore. That's a thing that was in 2014 and 2015, and people were just experimenting and figuring things out. But I think going forward, you really have to be fully decentralized. So why don't we jump into PegNet 2.0?
Let's do it.
That's a good transition.
Should you share your screen, or you want me to share?
I'll pop on. I've got the article here. Let me know when it shows up. All right. So PegNet 2.0, the way we've been approaching this is effectively doing drafts, right? So this is the third version, the third draft of the PegNet 2.0 white paper. It gets released. The community does a bunch of discussion and debate about the different features and effects of the proposal, and then everything gets updated and gets updated, gets updated. We're just gonna keep doing this until we've effectively ironed out and built consensus in the community around all the major items, so that they can be coded and tested and rolled out. So why don't we go ahead and just jump right in. For those that saw the article before, I've streamlined it a little bit. There was a lot of discussion about the core values. There was a discussion about liquidity. There was the discussion about defending the oracles. And so I've broken all three of those out as different articles. So you'll see the links down here for the core values article, defending the oracles, bootstrapping. Those are just longer conversations. So rather than trying to jam them into the 2.0 paper, it's like, okay, let's just make them standalone papers and link them right here at the beginning of the 2.0 paper. So I think that's helpful as a structure. Now, just to remind people, PegNet 1.0 rewards miners their conversions, 5,000 peg per block to the miner, 5,000 peg per block are available for conversions. P asset to P asset transfers are unlimited, right? That's the big advantage, is being able to convert easily in the network. Peg into P assets is how you add P assets to the system, so burning peg into P assets. Then you get into sort of the gateways, the fact that PEG and FCT in the first version were the two gateway tokens. Of course, we had to bootstrap the network somehow before PEG had a price. So you had FCT in there as a gateway in. And there are currently 41 P assets, including crypto, fiats, gold, and silver in the network. So let's jump into how that compares to PegNet 2.0. So I tried to break this out a little bit better with a description of sort of what these features address. So the first four are all about increasing the peg supply curve and increasing demand for PegNet itself. So as you can see, we're moving from 10,000 peg per block to 20,000 peg per block. And the big thing that we get out of that is staking. We get P asset staking as part of PIP 12 in number 3, and we get peg staking as part of PIP 13 in feature number 4. So whether you're holding peg and reporting oracle prices, you get reward for that. You're holding P assets because you bought them cheap off the exchange, great, you get a reward for that, right? So there's a reason to both hold peg and become an oracle, and to get involved in the arbitrage. And the big thing I want to emphasize here is nothing comes for free. PegNet 1.0 was launched with a mining reward, and we got a bunch of mining, but it didn't have a reward for liquidity, and it didn't have a reward for arbitrage. And so by creating those rewards here, that's the big step we need to take to bootstrap liquidity in the system. You have to give people a reason to do it. It's not enough to have a seamless, beautiful interface and extremely low conversion rates and all of those things. Those are all prerequisites. Those are all things you need that are necessary, but not necessarily sufficient to build liquidity in the system. You have to have some incentive. So if you want something, create an incentive for it. And so this is the big driving force behind the philosophy with PegNet 2.0 is to add staking. And as you can tell, it's 50% mining now, 50% staking. So they're both on an even keel, right, between the miners and between the stakers in the system. And I think proof of work is still important, but we need more than that. We need a way to reward a broad set of people in the network.
And David, how is the development behind the scenes on some of these new features? Where are we at? What kind of timelines? Things like that.
I'm glad you asked. So I have added a nice timelines and phases section to PegNet 2.0 paper. And so let's go through that real quick, and then we'll jump back into the feature stuff. So PegNet 10 is done, or rather PegNet Improvement Proposal 10 is done coding. Just needs to be updated with the current branch. PIP 12 is mostly done, like 70–80% of the coding. So this is the staking for P assets. The final design is nearly done for 13, 14, and 15. So this is, and you see in the PIP channel, like people debating the exact method by which you determine how much PEG people are reporting or reward the oracle, right? All those fine-grained details. So the next step for PIP 10 and 12 is testing. The next step for PIP 13, 14, and 15 is coding, right? So that's sort of the cycle. It goes to code, test, deploy. And so I'd say we're about halfway there on the coding as a whole, though some are harder than others. So PIP 13, the oracles, is probably the largest lift. 14, just to remind people, is just pauses in case there's a differential detected between the oracle's staking and the oracle's mining, like somebody's gone off the rails. But that's fairly straightforward to do the pausing in the code. And then 15 is just determining if there's some API that's gone haywire. And that's just a matter of turning off the API that's gone haywire and switching automatically to a new API. So the miners and the oracles in the system always have 2 or 3 different sources they can pick for any data source. So it's just having the intelligence to say, this looks suspicious, let's switch to another data source. So 14 and 15 are fairly straightforward. It's mostly the work on 13 that will take the time, but it looks like the design is just about finalized. So, we'll see. It's up to the developers, and even once it's all done, we want to do proper testing to really get there and know that it's solid. But while we're on this subject, let me complete this section. There's sort of an interesting expectation that this builds here, which is, there's more advanced versions of, say, a PIP 14 that we want to build, but not really time to do that for this release. So that'll get pushed into PegNet 2.5, which I would expect in the fall or the winter season. And so I think we're moving towards that maturity where we have a couple of releases every year. I mean, you can always have patches if you find a bug, but major releases twice a year in the spring and in the fall is looking what it looks like. And I think we should just keep the same type of branding. You're going to see PegNet 3.0 spring 2021, right? Just like you have a new iPhone number every year, a new Galaxy number every year. You can have a new PegNet number every year, and that'll make it easy for people to keep track of the developments. Yeah. So a whole number in the spring and a 0.5 in the fall, I think makes sense. But just
love the branding. I love the PegNet 2.0.
Yeah,
great.
Me too. And quick note while we're here, if you're a web wallet user or a pool user, a mining pool user, you won't need to do anything.
Cool.
So it's only people that are running full nodes, that are mining, that are exchanges, that are hosting or building wallet software. Those people will need to upgrade. But the average user that is on pTrader or some interface like that, you won't have to do anything. So there's no migration. When people hear 2.0, in the case of ETH, right, there's an actual migration bridge from 1.0 to 2.0. They're moving to write a new blockchain architecture. But in the case of PegNet 2.0, you won't have to do that. So just an important note there. But why don't we go back to the features? So we talked about increasing the supply curve, right? And broadening out the number of people that are getting these rewards and incentivizing people to add liquidity to the network, right? That's a big thing. Staking is coming. If you look at the next section, it's about closing attack vectors and increasing liquidity. And they're very sort of closely intertwined because there's a lot of things we want to do to increase liquidity, but you have to close the attack vectors. So if you look at feature 5, 6, 7, 8, 9, 10, and 11, it's all about those things. So let's go through some of the new ones. So 7 is new. PIP 10 will be implemented to protect against front running. So it averages the conversions over a few blocks for PEG and FCT, the low value tokens in the system, right? With every other token, the requirement is $100 million in market cap. So the only 2 tokens in the system that haven't met that requirement are PEG and FCT. But we needed them to bootstrap the system, so we had to figure out ways to protect those low value pairs against front runners. So PIP 10 is the averaging that does that. Now, what came along with PIP 10 is a proposal to make conversions unlimited from P assets to PEG. But this is a very complex issue, and I effectively devoted an entire article to it about bootstrapping liquidity, solving the bear whale problem, right? Meaning, if there's a big actor that wants to exit the system, and PEG is the liquid pair, if they convert all into PEG, then you have this large unexpected inflation of PEG supply, right? You know, PEG fell all the way down to a Satoshi and they had $100,000, they could, create a billion PEG, right? Or 4 billion PEG if they converted $400,000, right? Which would double the existing supply. And that causes a lot of problems, right? It sort of swamps out the incentive structure for the miners, the stakers, everybody else involved in the system. And so the question is, okay, what do you do instead of using PEG? And the thing the community has been discussing is using PUSD as the solution here to bootstrap liquidity. So PUSD is the most popular pair on PegNet, bar none. As far as conversions, it's sort of the flagship asset in the sense that everybody sees it as the main stablecoin of the system. They're the most listing pairs. There's the most external liquidity, and the exchanges seem willing to add more pairs, right? So let's think about not PEG as the entry point to the system, but PUSD. And this makes sense if you think about it like maker and DAI. If you wanted some DAI, you just buy some DAI. You wouldn't go and buy maker and go through their complex process of generating some DAI. You just grab some DAI off the market, right? And I think we're ending up seeing the same behavior from PegNet users. If they want PUSD, they just want to buy PUSD. And hey, if it's trading for under par, great, that's a discount on getting into the system, right? Which isn't possible with the PEG directly because you get dollar for dollar in PEG. So it's an interesting way of bootstrapping the system is use PUSD as the on-ramp and off-ramp, and PEG as the background mechanism to burn value into the system when you need more. So the way it would work is when PUSD gets to $1 or above $1, nobody wants to pay a premium. So there's an incentive for traders and people to burn some PEG and generate more PUSD and balance out that system again, right? And so I think that's an interesting approach. It solves many of the attack vectors that people are concerned about when it comes to PEG, and sort of gives a new approach to it. So this involves a lot of things, including getting more PUSD listings. The community is reaching out to the exchanges on that. It involves sort of continuing to build up the knowledge and expectation that people are using that to enter the system, right? And sort of recommending that to people that are new to the ecosystem. So anyway, that is like the biggest change between the last couple of drafts and this draft. is around the debate of unlimited conversions into PEG. So, and this has been an ongoing discussion in the PegNet community for a long time, but sort of the more we think through it, the more it becomes clear, you know, sort of how we need to structure it to avoid those attack vectors. Because even if you close all of the technical attack vectors, if you leave open this economic attack vector of a large user dumping into PEG, you still sort of break a lot of the incentives in the system. So I think it's a good design choice, and it sort of goes with the fact that PegNet is based on consensus, and if you can't get consensus for a change, that's probably a good indication that, you know, you shouldn't go that direction, right? So, and that's the process we're in, is building consensus in the community for each of these new steps. So the last couple features, and part of that is closing the FCT gateway. Not necessarily forever, but for now, I think it's important that PEG be the only means of burning value into the system, because it's a simpler narrative for people to understand. And there's not sort of this back of the mind worry that there's some FCT whale that's going to come in and add a ton of assets to the system, right? They understand that that was needed for bootstrapping, but, you know, until there's some mechanism where FCT can reward PegNet miners and stakers, which I would love to see proposals on that. And I think that could be applied to Algorand, Hedera, other blockchains that want to incentivize their users to enter into the PegNet. That could be a whole nother discussion, but for at least for now, for the purposes of bootstrapping, I think it's finally time to close the FCT gateway and really rely on PEG as the only means of burning value into the system. And then lastly, on number 11, you can see that there's a bunch of new assets that people want to add to the system: cryptos, Argentinian peso, United Arab Emirates currency. So I think this would boost us up to about 52 P assets. There are 9 cryptos and 2 fiat so far that meet the technical and market requirements to be listed. And part of this is because the price of crypto has been going up. More tokens are over that $100 million threshold and have more than 5 million of daily trading volume. So I'm going to stop there. Questions, things that you think I should cover, Katie, but there's a lot of good content here in this section.
There is a lot of great content. I've been keeping pulse on some of the conversations that have been going back and forth. There's been some very strong debates at some points more than others. And what I like about where this has gotten to at this point is circling back on what you've said, you know, earlier in the video, and then just recently about consensus within the community. And also at this point, PegNet is, I don't know, maybe 7 months old or so. You know, it's because of the nature of it, it has run this course where we're able to get a lot more testing, I think, done. So I feel really good about this. I know that the community is very excited to see these changes come in. I'm not sure that I have any specific questions that I think might be relevant to the users watching this at this time, other than pointing them right to the Discord where they can get involved. Obviously, the link for this article is in the description below, so you can have a dive into that as you see. And yeah, would love to have you guys join and tell your friends and participate in the conversation and building this.
Absolutely. And so maybe the way we can wrap it up is just talk about the effects. So this is a new section as well that I added to the PegNet 2.0 paper, because it's like, okay, here are the features and what do those mean, right? What happens because of them? So the big effect, like we talked about, is features 1, 2, 3, and 4 are about increasing the PegNet supply curve. This goes to building a network effect. If the network effect is a couple of miners and a few hundred people that converted FCT, it's not a big enough network effect to grow the community. We need a broad network effect where any new user effectively has the similar opportunity to get involved. And so when you think about the effect of going from 10 to 20,000 peg per block, what you're saying is they're going to be a little over 1 billion peg per year that will go into circulation. Currently, there's about 1.8 billion peg in circulation. And so you're talking about continuing this bootstrapping period where people can get a large position in the ecosystem by joining today. They didn't have to be there necessarily day one. So that's important. And the fact that we're bringing in people that are staking the assets, those are the end users. Those are the people that want to do conversions and use the pegged assets in the system, not just the miners that want to secure it and get a reward, and not just early people that bootstrapped it. You know, you're bringing in sort of the users having a really substantial stake in the system. So a full half of those billion peg a year go to those people doing P asset staking and peg staking, right? So I think that's important for sort of broadening the ecosystem. Now, they well may have a majority of the assets depending on how many peg get burned into P assets, right? So we've actually seen a decrease in the number of peg. There used to be 2 billion. Now there's 1.8. And if more burning happens, then maybe that goes to 1.6 or 1.5. And so it'll be interesting to sort of see the equilibrium that the community reaches. But a lot of those early miners and converters are effectively sort of exited by selling their peg, and new people have converted those assets into P assets. So we're moving from that bootstrapping to that sort of broader community. And so this is an important shift. I think the important thing is also this really drives the demand side. It's a sort of good thing I've conceptually come to, that you can't solve a demand side problem with a supply side solution, right? So if the main thing with liquidity is needing more users, then you have to incentivize more users. You can create as many of the tokens as you want that doesn't create liquidity, right? So supply side solution can't solve demand. Now, what staking does is create a large magnet for demand, because people want to return. People are looking for a way to get paid for their crypto, right? Especially in the current recessionary environment. And so I think this is the biggest magnet we could ever build for PegNet, to be able to stake anything that you're bullish on, any P asset in the system. You know, you're into Brave, great, pegged BAT, wonderful. You know, you're in Decred, there's pegged Decred, et cetera, right? So we can speak to all of those communities all of a sudden and get them a return that they normally wouldn't get if their token isn't a staking or reward-based token.
Do you need to stake in a particular wallet or exchange, or how?
That's the beautiful thing about PIP 12. And we should definitely emphasize this more. I'm thinking about a whole article related to the staking of P assets, because you don't have to participate in a pool. You don't have to, hold one P asset or another in particular. You don't have to hold it for a long amount of time, depending on how it's implemented, basically like a day. It does a snapshot of the addresses once a day, and it hands out those rewards, and there's no minimum. You could have $1. You could have $10 of P assets and you still qualify, right? So this is like the ultimate democratization of staking. Any asset you want in any amount for a short amount of time, that I think is going to be really, really powerful. Now, when it comes to the peg staking, for technical reasons, there have to be some higher requirements. The system can only handle so much Oracle data being published. You couldn't have millions of people publishing it, right? And so the Oracle staking reward, this is PIP 13 for staking PEG tokens, will probably go just like the mining reward does to the top 25 every block, right? And the software is going to need to estimate how likely it is that your Oracle will be included in order to publish. And in this case, it's kind of like the lottery system. The more peg you hold, the greater the chance that you'll win one of those rewards. So just like in mining, the more hash power you have, the greater chance you have winning that block. It'll be the same for peg staking in PIP 13. So you'll have to have a little more capital in that case, just for technical reasons. There's really no way around it. But I'm really glad that in PIP 12, we figured out a way for everybody to participate in a really broad way without any minimums and without any overhead or technical baggage that brings to the network. So yeah, it's really exciting.
Awesome. And then moving into the effect of increasing the liquidity and closing the attack vectors.
Sure. So like you said, I think conversions went live in October of last year. Mm-hmm. And so sort of having that real world data let's see, October, November, December, January, February, March, April, here we are in May, 7-8 months of data has been hugely valuable. And so effectively the community has found 3 attack vectors. Bad APIs, just sometimes the exchange gives you a straight up wrong number, oh, $1 is worth $10. No, it's not, right? And so you have to detect bad APIs. That's a straightforward one addressed in PIP 15. And then there are, what if there's a bad miner and they put out bad data, like we saw in the case of the white hat miner, right? That did this dramatic, come in and change the price. I mean, didn't affect anybody else's assets, but he sort of demonstrated inside his own wallet and then eventually burned those tokens to show that that attack vector was open. So that's the work around PIP 14. Actually, the PIP proposed by the white hat miner came back and offered a solution to the problem he had shown, which was sort of an interesting turn of events. Yeah. That's why we call him the white hat miner. So, PIP 14 would say, oh, the miners are putting out bad data. The stakers are putting out good data. Let's go ahead and just pause that particular pair so, no conversions get affected in the system. So that's PIP 14. So you've got minor attacks, you've got just bad API data, and those are 2 of the major ones. And then if you think about, sort of the source of the oracles, expanding that to stakers and not just miners is another way of addressing the oracle issue with miners. So you have a dual source of oracles now, staking and mining. You have detection of API errors. Sort of all these things sort of add up to making PegNet more and more robust. So.
Excellent. It has been very, very thorough. I think the way that you presented this in the article is really clean and easy to follow along. So appreciate that on behalf of the whole community, I'm sure.
Thank you. People give me a little too much credit. I am not coding these things. I, am not personally, the genius that came up with all these solutions or anything like that. But I'm trying to articulate them in a way that everybody can understand. And so it's just a lot of spending time with the developers, with the community, trying to understand what's being proposed and cobbling it all together in articles like this that everybody can read.
Very cool. Anything else you want to use on the share screen?
I think that's it. Like you said, the call to action, jump into the Discord. There's a lot of need for testing. There's a lot of need for people to review this, to spread the word about PegNet 2.0, to come up with explanations and graphics that talk about, oh, now we're going to have staking. What does that mean? You can stake any P asset, estimating that reward, putting up websites about that. There's just a ton of things that can be done, to address that. So, lot that people can get involved with. See people jumping into the Discord every day. A developer asked the other day, hey, I'm here to help with pips. Where do I go? And welcome, here's the pip channel, right? So no, it's good. There's a lot of healthy discussion, and it's a fun time because we're figuring out these things together. We're coming up with solutions, and we're pushing them out there. So
I love it. This is an exciting community to be a part of. Certainly unique in the crypto space, that's for sure. I I haven't seen anything else that's quite like PegNet in terms of the fully decentralized aspect of it.
Yeah,
Stablecoin network.
it's unique and kind of calls back to those good old days of 2010, 2011 in Bitcoin before things were overly commercial. It was, you know, a bunch of people trying to figure out the economic philosophy and, you know, how this was going to play out. So there's sort of a similar green field, blue ocean, whatever buzzword you want to use to, you know, of just possibility. So yeah, no, it's exciting.
Yeah, it's like Crypto Valley, green fields, nice lake. Come join.
Exactly. Cool.
All right, great. Well, this has been another great update. Thank you so much for taking the time out to go through all of this for the community. I'm sure this will bring in lots of new questions and interest, and look forward to meeting some of you guys in the Discord. All right, till next week.
Thanks, Katie. Bye.
Take care. Bye-bye.